Happy Wednesday, everybody. I hope you had a great weekend. And since it's hump day already, happy hump day. We're halfway through the week. Congratulations, you made it. Today is October 19th, 2022, and this is your delayed Wednesday market update. Back to Mondays next week. As always, I want to do a quick recap of last week's market action, and the benefit of the curse of coming in midweek is that we'll also give a bit of what this week has been about so far. We'll also preview what's left of the week. Let's do a quick recap of the past 7 trading days, last week until today. Last week we started on Wednesday also because of the Wednesday video, so I'll gloss over Monday and Tuesday since we covered them already. Last Monday stocks were lower. The Dow was down about 1/4%, the S&P was down 3/4%, and the NASDAQ was down 1%. Tuesday, also reported in last week's video, the Dow eked out a slight gain, up slightly. The S&P 500 was down about 0.5%, and the NASDAQ was down about 1%. Wednesday was when the fireworks started. Pre-market, as the wait for the PPI print, yes, we sell you the whole seat, but you only need the edge. At 8:30 Eastern time, that all changed. The PPI was hot, double expectations, and the futures gave back all the positive and then some. Stocks opened lower, rallied a bit, then settled into a trading range, waiting for the 2 p.m. for the Fed minutes. As if that will be news, we talked about that before, which it was not. There was some late selling, and the S&P 500 went out near the lows, but down about 1/3%. Dow and NASDAQ down ever so slightly. Thursday was another nail-biter, this time CPI, and although every news source out there was saying that it was bound to be hot, when it was, whoa, look out, volatility's back, in case you were wondering, and more than ever, the hot CPI sent risk assets into a free fall, and most of the indices gapped down about 2% or more on the open. The S&P 500, 3,500 provided the technical support this time, and the markets found some stable footing and digested that for about an hour. Then the markets ripped higher. By the end of the day, after being down 2% on the open, the S&P 500 was up 2.6%, Dow up almost 3%, and the NASDAQ was up 2.25%. I do want to note that you can see that the NASDAQ is starting to get more and more correlated with the other two. Just something to note in the past few weeks. Thursday did represent the 5th largest intraday reversal from a low in the history of the S&P and the 4th largest for the NASDAQ. Now, just a quick note on the 5 main reasons for that. I am sure that others have their list too, but my 5 reasons. Why the reversal for Thursday? First, positioning. This was just a technical thing, and there was a lot of money offsides on this one, so the move to the other side of the boat syndrome, you know, we've talked about it before. Second, same news over and over again. This is a theory we can only sell off and price in bad news so many times. So we already know what's next. So that's what that is. Third is the U-turn of policy in the UK. This is a big deal. We started the latest selling after the trust plans were announced, and that's what this is. We saw a U-turn on that. Fourth, news from the ECB that their terminal rate may be lower than expected. Add that to other central bank moves last week with hikes smaller than expected. Maybe we have the beginning of a peak hawkishness, at least in the ECB. Is it contagious? We'll have to see. And finally, back to better than feared earnings. The beginning is not coming in too badly. We have spent a lot of time lowering the bar, but let's see how it turns out. I don't think you should plan on this being the turn at the bottom, but it is important nonetheless. Stocks went back into selling mode on Friday and ended the week on a fizzle. Focus on the inflation fears again. The University of Michigan inflation survey has expectations climbing again. Earnings for the news of the day. Big banks starting the beauty contest. Most of the news was in line with expectation. Nothing earth-shattering from them. We'll see what this week brings. The Dow was down 1.34%. S&P 500 down 2.37%. The NASDAQ down a little over 3%. S&P and NASDAQ had another losing week, down 1.55 and 3.11 respectively. For the week, the Dow actually pulled out a gain of 1.15% for the week. Since we're already at Wednesday, stocks reacted from the news from the UK that they want a do-over. Most of the changes announced that a few weeks ago that actually started this most recent selling. Well, just kidding. We didn't mean it. This was good news for stocks, maybe enough to take them back to where they were before the blunder from the Bank of England. Then the market will get back to watching what matters, the inflation numbers. This week starts earnings in huge numbers, so we'll see what that looks like and how forward guidance looks. Monday's earnings looked pretty good across the board, mixed eco numbers too. Monday stocks gapped higher on the open, churned around for most of the day, and then closed near the highs. In case you're missing the volatility, the Dow was up 1.86%, S&P up 2.65%, and the NASDAQ up almost 3.5%. Going into Tuesday, the Dow was up 6% from Friday's lows, and the NASDAQ and the S&P were both up 5% from Friday's lows. Stocks had another day in the green on Tuesday, with about 10% of S&P stocks reporting so far their earnings, 70% of them coming in better than expected. That's enough to forget about inflation, right? We'll just have to see about that. Dow, S&P, and NASDAQ all up about 1% for the day. Things were choppy. The NASDAQ actually turned negative twice during the trading day, and the Dow was up over 600 points at one point in the day, actually closed up 300 points plus. The rest of this week will have two main sources of news. The Fed is still the lead story, but the earnings are trying to take the oxygen out of the room. Still left today and the rest of this week, Fed head Parade, Kashkari, Evans, and Bullard today. Some housing data too. Along with some jobs data, we'll hear from Jefferson, Cook, and Bowman on Thursday, and we'll get Williams on Friday. As for the earnings fashion show, we got the beginning of the banks last week, but we got Bank of America, BNY Mellon, and Schwab on this past Monday. Big ones on Tuesday were Netflix and United, both after the close. They're showing up in the pre-market on Wednesday. Goldman Sachs up during the normal trading session after Tuesday morning earnings reported that it was better than expected, like most of the banks so far. Tuesday, we'll hear more from more. Tesla is big one after the close. Abbott Labs, Procter & Gamble, Las Vegas Sands, they're also slated for today. Tomorrow, some names to watch: American Airlines, CSX, Snap, and Nucor. We should wrap up the week with Amex, Verizon, and Schlumberger. By the end of this week, we'll barely be able to count the reports. So many will come, and we'll have to see. Will the $230 per share estimate on the 2023 S&P 500 earnings hold up? We'll have to see. Guidance: how much is perceived to be priced in already? That's the big number. A few more trading days left this week. Going into Wednesday, trading is looking like a good week, but we're not out of the woods yet. As the coach in the movie Major League said, we've won 2 in a row. If we win one tomorrow, that's called a winning streak. It's happened before. I feel that things are turning around for us. So I'm not sure if he's right on this one, but we'll see. Keep in touch, and we'll get deeper into as we get deeper into Q4. Remember, we'll be reaching out to discuss year-end plans and 2023 planning. Watch the Friday videos for updates on what we'll be doing as we come to the end of the year. Have a great rest of the week. We'll be back on Monday next week. See you then for another market update. Have a great week.